Hi, I'm Hedgeye founder and CEO Keith McCullough. I'm excited to announce the Hedgeye on the Prize tournament. I challenge you to compete in this simulated investing tournament to win some serious money. We'll be awarding weekly and monthly cash prizes along with the big grand prizes. Along the way, we'll teach you how to take your investing to a whole new level. I hope you'll join us. I'll be coaching you every step of the way.
Bottom line here is that things have sort of bottomed out or are very close to levels where they would be bottoming out, both on the HSI and on the CZ. That's obviously what we're seeing in the MasterCard and Visa data, sort of that rollover from those trough levels back in August, September. Now we're starting to get October data. On the housing side, just thinking sort of prospectively about what's going to happen. Obviously, we're coming off basically the fastest rate of home price appreciation nationally ever, basically 20% year-over-year growth. And people are, you read a lot of mainstream media talking about a bubble and things are going to collapse and blah blah blah. And the reality is that if you look at here on slide 17, the inventory level of single-family homes for sale is basically at its all-time lows. So this chart goes back, almost 40 years. And even though we bounced a little off the lows, and there's sort of a seasonal factor there too, we're very much in the lowest end of the range that we've really seen in 40 years. And the implications there, if we go to the next slide 18, is that when you're in that low inventory territory, at least historically, you generate forward double-digit home price appreciation. So in other words, we've had 20% home price appreciation in the last 12 months, but the inventory levels are still so low that the outlook for 2022 is that they're going to double-digit appreciate again. And as long as that inventory dynamic remains where it is, you can expect the upside to persist from a home price standpoint. So again, the reason I mention this is because, well, aside from sort of the obvious, is because shelter is still a third of the overall price basket. We know that just based on the 20% appreciation we've already seen, that's going to push the OER portion of shelter up over the next 24 months into the 6, 7, 8% range from where it is currently, down around 2, 3%. But this is telling you that that's not going to be a transitory thing. That's actually going to continue through next year, which will continue to flow through not over 1 or 2 years, but over 2, 3, 4 years. So again, like if you look at the 5-year break-even rate, it's now up over 3%. In other words, the bond market is starting to price in longer-term structural inflation, and that's because of what you're seeing here. So big baskets, food, shelter. The table is set here for these to go higher for a long time. And then quickly, slide 19, next slide. This is sort of setting the stage even further fundamentally for home prices to continue blasting off. All of this is going on while underwriting standards are actually incredibly tight. Those underwriting standards are going to ease, which is going to bring more people into the market to buy. And then on the next slide, slide 20, this is the demographic reminder. You have a massive number of millennials. So there's like 65 million people in Generation X and 95 million millennials. And they are getting into their prime home buying age. You can see those numbers sort of coming through. So just tons of demand. Underwriting is going to ease, which is going to make it even more possible. So in other words, you're very supply constrained. Inventory is all-time lows, and you've got demand that's going to be relentless for the next 2, 3, 4, 5 years. So all of that is going to keep home price appreciation running very, very hot for a long time, and that's going to keep flowing into inflation. And just as a final point on that, I was looking back historically at home price appreciation in the 1970s. And from 1975 to 1980, the annual growth rate in home prices was 12% for that half-decade period, 12% a year. So it's not at all far-fetched that we could be in this sort of protracted double-digit home price appreciation environment.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there, subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.